Good afternoon, traders and investors. Will back here with another one, guys. Today we had a very bad day in the markets here. You can see most of my screen, most of the indexes are red here. SPY dropping 1.5%. QQQ just the same. Financials too. The Russell almost down 2%, guys. Right? This has just not been a very good day overall. And I want to start off this video with a message to you guys, okay? Let's take a look at the CNN Fear and Greed Index here. You guys can see that it is down to 27. 27. So obviously, guys, the months of August and September have not been easy. We've called this on the channel. Seasonality has played into effect. The increase in our inflation numbers have been expected and have now materialized, as well with some hawkish comments from the Feds and some future increases in rates, and holding them for longer has really been weighing on the markets here. And it all started off right here on July 27th here with your US credit downgrade. That was the catalyst, and since then we have not been able to recover. So I want to tell you guys, this is not the time to be selling stocks that you truly believe in. It could be the time to reposition from some growth companies, non-profitable companies, into other bigger, larger, profitable companies that you've always wanted to own. Now is the time to be going shopping. You want to be buying when everybody else is selling currently, okay? If you feel that you've just been getting hit over and over and over in the past 2 months, this is completely normal. I want you to just take a deep breath and realize that this is the exact moment when institutions will gladly pick up your shares that you sell to them. And then in 3-4 months, when they're higher than where you sold them at, you will be kicking yourself for selling them. I want to remind you guys that our long-term bulls are in complete control of this market. Look at this massive upswing here that we've had all year pretty much since last October. The lows are nowhere close, guys. This is natural market movement. We've been due for some monthly pullback here, so it's only normal that we get it, and it's fitting that we do get it in the 2 months that are known to be, on the yearly basis, the worst in terms of seasonal performance here. So please, please, please exercise caution in your trades. Don't get too aggressive with it, but now is time to buy the dip on companies that you truly want to own and truly love. Set some levels up. Don't go too heavy, and it's time to start dollar cost averaging in companies that might have ran away from you earlier this year, right? So all that being said, guys, this is a perfect opportunity, in my opinion here, to be adding to your portfolios, as we always want to be buying on red and not green. I know it's contrary to how a lot of you may be feeling. You may be feeling like the sky is falling and that things will just not stop going down. Trust me, they will. We are a lot better positioned in the markets overall in terms of macro as well as we were this time last year. So just remember that, guys. The long-term bulls are in full control here. This is just normal market movement and an expected pullback, okay? So that being said, guys, let's go over the SPY briefly here. We'll go over our heat map here. You can see, guys, no need to introduce this. This was a broad market sell-off the entire day. Nothing being spared. Big tech in the red, heavily in the red on a few names, especially Amazon with a bit of some lawsuit news here. Oracle down 3.5%, almost 3.16%, right? Everything getting hit really hard. It was a very unfortunate day for the markets. On the one-day relative performance, you can see, guys, that everything is in the red. On the 1 week relative as well, everything in the red. And in the 1 month performance, guys, the only thing positive has been energy due to rising oil prices. So it just has not been a very good past 2 months as a whole, but now the sell-off is accelerating, and it's known to be the last 2 weeks of September are known to be some of the most brutal weeks of the entire year, guys. So we will get through this. A lot of our indicators here are starting to trend towards oversold, and that's exactly what you want to see when you are looking for a buying opportunity, guys. So just keep that in mind. So before we get into the technicals here, we do have one earnings to cover, and it's from one of my favorite companies in the entire world, guys. It is Costco. Costco had their earnings today, reporting some very decent earnings, but unfortunately being sold off by the market, probably due to just negative market effects as a whole. But you will see here that they had a double beat on earnings, beat on revenue here, and they also had some decent things to say, guys. Costco potentially due for a price increase on their membership fee, which is the highest driver for margins. So looking forward to that, guys. So let's go over the earnings call ever so slightly here, and then we'll get back to our major indexes, our major tech names, and take a look at my portfolio. I did add a few positions here. So Costco tops quarterly earnings expectations, even as sales remain soft. So consumers have been pivoting, guys. A lot of talk in the last 2 months, like we've been saying, consumers have been laying down the discretionary items, the items that they do not need because they're getting squeezed by higher inflation rates, and they're getting squeezed by a propensity to spend more on credit because their savings have now been diminished as they've depleted them over the past 6 months here. So comparable sales for the company rose 1.1% year over year, only 0.2% in the US. Costco is enjoying strong grocery sales, but seeing weaker trends in discretionary items. However, there are a few very good points here on Costco as a whole, okay? So the traffic to Costco rose 5.2% worldwide and 5% in the US on a year-over-year basis. That's very, very, very good. So despite the fact that the transaction amount dropped because people feel that they have less money to spend, maybe a little bit worried about a looming recession and higher prices, well, the traffic to the stores is increasing. This is very good for their business as a whole, guys, okay? And also down here, I also want to say this, guys. The favorable membership trends continued in the quarter. Costco ended the period with 71 million paid household members. Guys, that is absolutely massive, right? Recurring membership revenue up nearly 8% from a year ago. That growth outpaced its rate of new store openings, which grew by slightly under 3% over the past year. So Costco, not only is their foot traffic to stores increasing, they've been increasing memberships at a faster pace than they can even build stores. So that means that their inventory turnover in the stores that they do have is very, very good. You guys have probably been to Costco before. It is always super, super, super busy. And that's exactly what you want to see, guys. Very, very good news in Costco here, right? So unfortunately for them, they were not able to drive sales in discretionary items, but not many companies have been able to, right? But overall, guys, a very decent quarter, right? Mitigated by a bit of consumer slowdown here that we are seeing. Consumer is still healthy, but choosing to spend their money a bit more wisely here. And you guys know Costco, a lot of their business is from higher ticket discretionary items, right? Vacuum cleaners, televisions, iPhones, right? They sell absolutely everything that you can want, not just the groceries, right? So consumers pivoting a slight little bit here and favoring more of their grocery business, which is still very good for Costco, guys. Costco makes some pretty good margins on their grocery business as well. And now Costco, you know, like in terms of price performance, right? Costco's been very, very cool here, maintaining a very, very good little range here, close to the all-time highs. I really see no red flags in this stock at all. It's been consolidating here for the better part of the past year and a half. That is very, very solid accumulation, guys. And any pullback will just be for a monthly higher low into 2024 and 25, which I think are going to be very good for the company. So that's pretty much it for Costco earnings, guys. Let's take a look at our major indexes here. So starting off with SPY, right? So SPY, daily downtrend continues. This leg here is absolutely massive, guys. When the bounce comes, I'll remind you, we are only looking for a lower high. Anything below pretty much 451 will just be for your lower high for a retest of the lows or flush and continue the daily downtrend here. But I want to show you, look at the RSI, all right? Look at the RSI. We're all the way down here to 30. When is the last time that we've been down all the way here to 30? Well, let's go have a look here, guys. So you can see it right past my head right here, 30. The last time we were down here, guys, was last September on the daily. The absolute market crush of September. Fitting, isn't it? August and September of last year into pretty much early to mid-October was the crush cycle. That is what we've been talking about on the channel. Potentially the next few weeks into early October are going to be the most brutal, but then I do believe that seasonality will take over. We'll have Q3 and Q4 earnings that are coming up in the next couple of months here. Should be better for a lot of companies here, and we should be able to get potentially some more support, some more positivity out of the Fed now that they've kind of laid all of the negative cards on the table right away. It's pretty much a case of, well, we can only get better from here, right? So pricing in all of the negativity right away in the past 2 months. That's what the markets have been doing. So guys, daily downtrend at this point, weekly downtrend as well. So monthly consolidation is still underway, guys, right? So anything pretty much above 381, right, is just a monthly higher low for further bull control to the upside in the future here. So September looking like it is going to end pretty red, but we are getting oversold here, guys. You saw the fear and greed index, right? This is when people are selling. Don't sell your shares to the institutions. If you can afford holding and you're happy with what you have and they're profitable companies, there's no reason to sell. If anything, you should be finding more money to even add to those positions here, guys. So I'm very, very bullish on the markets. But now, daily downtrend is absolutely confirmed. We're just looking for the bounce. We'll measure the size of the bounce. The size of the bounce will tell us if we can reset for a daily uptrend or if we need one more leg down before finding some support here. Next area of support, I've said it before, we're coming right into it, guys. 420, all right? 420 is this whole little top of this whole range right here, right? So it's going to be very, very big support. QQQ now actually setting the weekly downtrend. QQQ was the only sector that had not set the weekly downtrend, but now it has not been spared as well. So daily downtrend now continues, right? QQQ also getting fairly oversold. RSI down to 33. When's the last time it was 33? Let's go back here. We'll see that it was last December, and prior to that, it was once again last September and October, right in this pocket right here. So once again, coming into seasonality here, QQQ can drop a bit more. If you want to know the level it can drop to, guys, the next area of support is 348. And then on the weekly, I'm potentially looking out myself for the 335 pocket here. If things get really nasty in the next 2 weeks, I think this is where we can go before everybody gets crushed and everybody starts really panicking here. QQQ could just head down there and potentially bottom out, and that would be pretty much the yearly bottom here off of our fall seasonality, right? I'd be looking for a dip into this area, into the long-term moving averages, and then pretty much support, and then looking to launch higher here into the remainder of the year and into 2024 here. So just keep an eye on that for QQQ, but bears full control now, just looking for a bounce, and then we'll see how high is the bounce will determine whether we're going to flush, small bounce, and come back to the lows. The flush is almost guaranteed. High bounce, and then come back down, likely to get a higher low, and then we can look for the daily uptrend reversal. XLF financials getting absolutely destroyed today as well, right? So really crushing through my support zone now, 34 to 33.50, right? So now we're coming even below that. So this move is very, very, very aggressive to the downside, guys. RSI is all the way down here. When were we last down here, guys? Well, you'd have to look all the way back to our banking crisis in March. So a lot of things are coming to areas that we've not been in a few months, guys. Everything pretty much falling off a cliff. Nothing has been spared. Even MasterCard and Visa were down today, right? So on the weekly, what are we looking for, guys? Daily downtrend means look to the weekly downtrend as well. So at this point, guys, our key area of support remains 32.50 at this point. Weekly downtrend is well underway. We'll be looking down here to provide some support. If we do pull down into the 32 to 30 area, I will gladly be writing some options on this index. On the monthly, anything pretty much above 31.30 is just for a monthly higher low tightening range here right now for the markets on financials here, but they are holding fairly decently, right? It's not as if we're crushed back down to COVID 2020 levels. So just keep an eye out on that, guys. But as of now, the bulls need to start everything from scratch. Size of the bounce, once again, will be key. Decent bounce, set up for a decent potential daily uptrend. Weak bounce, and use this whole area as resistance and can't get above and just trickle like this, probably going to get another flush to a lower low. XLV. So XLV Healthcare also flushing once again down here, coming dangerously close to our 128 line in the sand level here, guys. Daily downtrend on XLV. So daily downtrend, still looking for continuation of the downside here. Weekly downtrend as well. Now we're coming up, guys, to the danger zone, right? We may just lose this whole area. If we lose this area, guys, right? If we lose the 129, you look to the monthly. The monthly support then comes into play, guys. This whole 127, 128 pocket is going to be very crucial. If you flush this, guys, it'll be a rollover of the monthly, and that's not what you want to see. Even though we can potentially roll over here and just maintain this tightening range, even all the way down to 121, it just means that the bulls have to put in that much more work to eventually reset a monthly uptrend, which could last into early 2024. So I would like to see them maintain this whole 127 area right down here on the monthly. But for now, we have to deal with first things first, right? The daily, they need to start reversing the daily even. So size of the bounce, need to see them get as close as possible to 132.50, and then we will see if they can reverse the daily uptrend. But for now, bears full control of the daily, full control of the weekly as well. So we remain in our seasonality correction. IWM Russell getting absolutely punished as well, guys. Really, really sorry for all our growth bulls out there, but they have not been performing well. This head and shoulders was clear as day, and it finally played off and fell through. So now we come back down to our previous support areas here. This whole lower 170 range, right? If ever we come down into the 170 range and I can write some options below 170, let's say 170 down to 165, this is a very decent area. As a matter of fact, my sweet spot would be down here. This was just an area of support. So now that we've smashed through this whole area, previous resistance was now support. We've smashed through it, guys. The bears are in full control of this chart, absolutely massacring this chart. You can see on the RSI here, look how low it is, below 30, right? When was it below 30? You would have to go all the way back, once again, to our banking crisis to find RSI levels this low. And then previous to that, guys, it is once again last September. How fitting, around the same time, right? So paid a dividend as well. That obviously didn't help the price action movement. So daily downtrend means also look to the weekly. It is also a weekly downtrend at this point. So we're looking for this move here to bottom out. Likely going to bottom out here in the 170 range as soon as we find some area of support. And on the monthly, guys, on the monthly, you also need to be holding this area. This is just one massive, disgustingly tightening range, right? So going to need to hold this whole 170 to 165 range, because if you flush this, guys, it would turn in, unfortunately, to a loss of the monthly uptrend, which the bulls have been able to kind of keep in line this whole time. You don't want to see them lose the lower end of this range, 162, because then it could get pretty nasty, heading all the way down to around the 140 area, right? So going to keep an eye on that. On AAPL, just know that if it does come down here to the 165 area, 170, right, I'll be looking in the high 160s for some options. And lastly, our Dow Jones value names also not being spared, guys. I mean, there's some great deals out there on value names, guys, like, you know, like Nike, right? Look, Nike has earnings on Thursday. They are absolutely crushed now at this point, right? Roughly, you know, pretty much 50% off the all-time highs. Nike's been performing decently, got caught up in the China economy slowdown as well. They're a discretionary item, so people may have less money for shoes. But, I mean, still, guys, like, this is just a great company that you can own long-term, right? Louis Vuitton is one that I've been investing in for the past 6 months, right? It is now in my sweet spot, right? This is a company that just needs no introduction. They own 75 of the top brands in the world, luxury brands. Chart is absolutely beautiful. We're looking for the monthly high or low. This is my sweet spot to be buying Louis Vuitton. It's coming right into it. I'm a buyer of this stock. Look at another one, John Deere, right? John Deere pulling back, consolidating here at the all-time highs. They had some of the best earnings that I ever saw last quarter, and they still dropped around 5%, right? But this is a company that I do want to own, guys, even at these prices. If we pull down, guys, into the roughly like the 360 range, 360, 350 range, I will be picking up some John Deere. This is some of John Deere's lowest PE ratios that I have personally seen in a very, very, very long time. Their price to earnings ratio is only 11. And this company just absolutely creates very, very decent revenue, very decent profits as well. They have a very wide moat that's almost impossible to take over. So sorry about that, guys. So if we come over to John Deere's PE history right here, you will see, guys, that pretty much their stock price is going up. Their PE ratio has been going down. Look at their EPS, just absolutely monstrous EPS growth, guys, for the past 10 years pretty much. And you'll see that their PE ratio now is 11.38, right? It hasn't been that low since pretty much 2015. So like 8 years, guys, right? So it's been a very long time that they haven't been this cheap. I know that the stock price is high, but they've just increased earnings, right? So there are some good value deals out there to be had. It's just you need to be doing a little bit of digging to find them, right? So Dow Jones names coming down here, right? On the downside, weekly downtrend as well, right? We've now flushed our previous area of support. Very, 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 we're almost flushing it. 33,500 is going to be that level here. But if we do flush this, guys, you know, unfortunately, it's already a weekly downtrend here, but is not looking very healthy. Slight head and shoulders here as well. At this point, we have to look out to the monthly, guys. And the monthly, your line in the sand level remains 31,500 after that, right? Anything above that is just for the monthly high or low, so we will be looking for it. Monthly bulls are in control. Still a decent amount of space here, but now is the time, right? Dow Jones getting oversold as well. RSI down to 30. That hasn't happened since our banking crisis. And prior to that, guess what? Last September. Right? So keep an eye on that, guys. We are much, much, much better off, in my opinion, than we were in March and in September. So this sell-off, guys, very, very hardcore sell-off, but I do think that it's a very decent buying opportunity, even though the bears do control the daily and the weekly timeframes at this point. You just have to focus on the fact that your longer-term bulls are still in control here, and the markets overall are healthy. So daily downtrend, just going to be looking for the size of the bounce once this move bottoms out, which is getting close. Once it bottoms out, look for the size of the bounce. Small bounce and coming down lower, probably going to flush. Big bounce and coming down lower, probably good buying opportunity here. Set the daily higher low and then run higher as we move into October seasonality, which is usually quite better. So now let's get into big tech here, yeah? So big tech, I'm gonna run through these quickly, guys, because not much has changed. So now Apple flushing our weekly lows here. 172 has officially been lost at this point. So Apple, unfortunately, is now in a weekly downtrend. I don't care even if they reverse from here. They have set the weekly downtrend at this point, so they will need to reset a brand new weekly uptrend as soon as this move bottoms out. We are in my sweet spot zone, guys. 175 all the way down to pretty much 168. We are right here. So I have written an option here at the 170 level on Apple. I'll be very happy to pick up some Apple shares if we continue trending lower. But now the bulls have pretty much lost the daily trend as well. So daily downtrend has been confirmed. Weekly downtrend has been confirmed. So at this point, we're just looking for this chart to bottom out, guys. Any move higher, we will at this point, guys, need to take out our previous highs, 176, to reverse this and potentially set the daily uptrend. But if we just keep pushing lower and lower, then the move needs to get significantly bigger to then set that up, right? So it's pretty much safe to say here that the end of September and early October, in my opinion, is going to be a write-off at a certain point for a lot of these stocks. Don't expect them to just reverse and just fly to the moon. It's going to be a grind of a process here. We just need to wait for the markets here to bottom out and then start their reversing process. So it's time to DCA and be patient and wait for these companies. But now Apple in a weekly downtrend. So weekly downtrend, just look to the monthly, just looking for a monthly higher low, guys. Anything above 124, right? So much space for the monthly higher low. So just keep an eye on that for Apple. Now AMD, give me a second. So now AMD holding steady here at the $96 range. Not much movement here in the past 4 days. Still holding. I do have an option here down here at 90. So if we do continue to push lower, I will be glad to own some shares of AMD at the $90 level. But daily bears are in control. Daily downtrend confirmed here. So if we need the bulls to push, going to need to see them get as close as possible to 104 to potentially reverse this daily uptrend. But as of now, right, just in a weekly downtrend, just looking for these charts to bottom out pretty much. Your next area of support is all the way down to $87, $88. At this point, AMD still in monthly consolidation mode. Anything pretty much above 82, just the monthly higher low. So the more that they push down, guys, right, the more that the bulls have to do to eventually reverse this, guys, into next year. So keep an eye on that on AMD, but AMD representing some very, very good risk to reward, guys. If we do come down here into the $80 range, I will be adding even more AMD because this is one of my favorite companies to own in the whole semiconductor business. And I do think that they are representing some good risk to reward, but it's just now bulls have all the work to do all over again. Daily charts on all these timeframes are key. As long as we can't set daily uptrends on Apple, AMD, Amazon, Google, everything, right? No need to be looking higher. So we need to wait until the daily downtrends stop. Then when your daily uptrends start again, you will then look to the weekly for the size of the weekly bounces. Amazon also falling off a cliff here, right? Daily downtrend is pretty much set at this point, right? So at this point, guys, Amazon, I even opened a position here at the 124 area when it was trading at 127, but it just got absolutely crushed here with some news about the impending lawsuit as well. Right, so that's been no stranger to Amazon. They've been dealing with it for years. But at this point, guys, sweet spot, true sweet spot for Amazon remains 118 all the way down to 114. If we come down to there, I will be obviously averaging more into Amazon. Now we are currently dealing with this whole area of support, right? It's a tight, big little range here, 127 all the way down to pretty much 123. That's why I wrote the option right here for this week. So we'll see if it can add some support temporarily, at least, to kind of backstop the markets this week. But as of now, the bears are in complete control on Amazon. Any move up at this point will just be for your daily lower high. Anything, below here pretty much is your daily lower high. And then we'll look to see, can they flush into a further daily downtrend and further weekly consolidation, or can they reverse? On the weekly as well, we have now pretty much lost our weekly, right? Our weekly lower high was here. Our weekly higher low, was here, 131. We have now lost that. So now Amazon, if we do bounce, we're going to need to see the size of the bounce on the weekly. And if we get a weekly downtrend into potentially monthly consolidation further into the month of October. Wouldn't be surprising to me though, guys. This is the first month of consolidation on Amazon pretty much since February. So it's been a long time coming. No red flags for this company as a whole. It's just the stock market in general as a whole is just correcting right now. So it's normal to see these big drops on Amazon. Look down below here, but temporary support should be coming up pretty soon. And we are kind of trending here pretty low on the RSI here. So a couple more red days like this should get us oversold. And we'll have a good indication if we can get a daily bounce going here. But as of now, guys, just be patient. Be very patient with all these, okay? So now we're going to move down to Google. Google not doing so bad, kind of getting some support here in the 129, 128 area, right? We are in a pretty heavy dip right now. So unfortunately, guys, the bulls have lost the daily uptrend here, right? So we had the daily uptrend, and now we've lost it pretty much since we flushed these previous higher lows. So now what are we expecting? Any move higher is just going to be for a potential lower high, anything below here. And then we're going to look to see if we can either double bottom here or if they flush the lows into potential weekly consolidation here. So that's what I'm looking out for on Google. Keep in mind, guys, that we do still have a decent gap to be filled all the way down to the 123 mark. If we do come down here, guys, do come down in the lower 120s, my sweet spot is right here, right? 120 all the way down to 115. I would love to be picking up some Google there. So let's say we do set the daily downtrend and come down here and fill a bit of this gap. I will be looking to write some options here in the 120 range. But as of now, guys, Google bulls are still holding on to the weekly barely. 127 is your weekly line in the sand. If you lose that, you lose the weekly uptrend, and then it'll be up to the bulls to see, can they save the potential of a weekly downtrend, right? By reversing into potentially consolidation and moving higher here. So we'll see. We'll take it one day at a time, guys. But one thing's for sure, I'm going to look at the wider levels here. Comes down here. I am buying. Google still looking very healthy on the monthly. But if September and October have to come down a bit before rallying again, then I will be buying this dip on the monthly. So just keep that in mind, guys. Longer term timeframes are key as the bears control now the dailies and the weeklies. Meta looking kind of decent here on Meta, not dropping as much as the rest of the market. So Meta really consolidating, guys. The level for me, guys, is this whole range right here, right? 288 to 280 pretty much. This little pocket right here, if we flush that, guys, you will then lose your weekly uptrend, right? So if we flush that, lose the weekly uptrend, at that point, it'll be monthly consolidation on Meta. So the next few days are really crucial, but I like the fact that Meta hasn't lost too much, right? So this weekly chart on Meta is really crucial for me. Remains to be seen if the bulls can keep this tight and kind of wait out the volatility that's been plaguing the rest of the markets. Q3, Q4 should be very good for advertisers. I will remind you. So I wouldn't be surprised if Meta does have some very decent earnings here. Meta earnings coming up still in about a month's time, right? But wouldn't surprise me if they do have great earnings. It just remains to be seen. Can they keep it tight until these earnings happen? Or will we get the flush here? Obviously, you can also get the rise if the markets start cooperating here, guys. But as of now, the bears do look like they're kind of holding the stock in place here for pretty much the past month here. So not much to report on Meta, not much price action. Microsoft here, Microsoft flushing, setting the weekly downtrend just like Apple. So it finally happened on Microsoft as well. A lot of names setting the weekly downtrend, guys. So now, daily downswing still not finished. As soon as this move bottoms out here, we're going to be looking for a lower high. Anything below 341, going to be the lower high. Depending on the size of the bounce, you can tell if it either going for the daily uptrend reversal. If it's a very weak bounce, however, right? If we bounce, excuse me, and we only get all the way up to here and then start pushing lower, well, I think you know what's going to happen. It's probably going to flush to our lows. And then 307 to 285 is my sweet spot on Microsoft. So for any which reason this weekly downtrend continues into my sweet spot, I'll be buying. Why? On the monthly, anything above 222 is a monthly higher low. Come down in this pocket and we'll be picking up some Microsoft because I like this company. And I do think that in the next 6 to 9 months, it'll be trading a whole lot higher than my sweet spot right here. So that's why I'm very anxious to be looking out for it. But now Microsoft daily downtrend and weekly downtrend as well. So I need to wait until we don't get a daily uptrend. You can't say that your weekly move down is finished. The whole time that the bears control this and you don't get a daily uptrend reversal, the bears are in full control. Can't say the weekly's bottomed. NVIDIA also coming down here, dangerously still close to our 400 psychological level, and that would be the loss of the weekly uptrend. NVIDIA, one of the only names, I think, with ON Semiconductor that hasn't lost the weekly, right? But if you look at TSM, right, lost the weekly uptrend. AMD, we've went over it already lost the weekly uptrend. So NVIDIA and OM Semiconductor, the only ones who haven't lost the weekly uptrend here, right? So we're going to be looking out for that, guys. The daily bears are still in full control. We are potentially getting our lower high here, right? you can see 4 days of trading. What were we looking out for? Lower high, anything below 461, lower high. The bounce is not juicy enough, guys. Bounce is not juicy enough for another red day, guys. We may flush this. The daily downtrend continues. Flush this whole 400 area. Well, unfortunately, you will have lost your weekly uptrend. At that point, guys, we will be looking lower to your 373 area. And then there's a massive gap that we are potentially looking to fill. If the markets don't cooperate here for the next 2-3 weeks, that would be expected that the bears, will take full advantage potentially on NVIDIA to do that. I know that it's a stock favorite for a lot of people, but this is just the way the technicals work, guys. You lose your weekly uptrend here, it will be monthly consolidation. And for NVIDIA to put in a red candle in September and maybe even October and look something like this, right? Something like this. Come back down, touch our previous all-time highs, and then continue rising. Would that look so awkward? No, it would look perfectly fine, right? It's just, I know the short term, it may be painful to kind of sit through that, but it's something that you have to keep in mind here. So daily bears are in full control here. Weekly time frame is key, 400 psychological level. Keep an eye on it, guys. And now our last one's Tesla. Tesla, right? Tesla, not doing too bad. They were green on the day here today when everything else was red, but pulling back a little bit here today, consolidating, really struggling, the bears, to break our 240 area of support, right? Previous support is now being also used as support in this case right here, but this is a very nasty move to the downside, guys. At this point, any bounce, anything under 279 will probably be for a daily lower high, and then we'll see size of the bounce is key. High enough will potentially get us a daily trend reversal here into potentially mid-October, but a short bounce here, we may just be heading lower back into our 230 area, but that's okay. We still have some space on the weekly, guys. Anything above 211 is going to be a weekly higher low, right? So we could just tighten up. Tightening range, right? Very, very possible. When's Tesla's earnings? All the way over here, all the way 18th of October. So if we do just tighten up until earnings, that would not be surprising at all, and it wouldn't really look weird on the chart either here, guys, right? So we're going to keep an eye on that, guys. The bulls still looking healthy, and even on the monthly, guys, monthly bulls are still looking very healthy. Tesla now with 3 months of consolidation, anything above 150 is just a monthly higher low. So even if we do pull back here into my sweet spot here, 230 down to 210 pretty much, that is perfectly fine, guys. I really like those prices on Tesla. We'll take this one day at a time. Size of the bounce, whenever this move bottoms out, size of the bounce will be absolutely crucial to determine where we're going with this. But now the bears in short-term control. And now Palantir and PayPal. Palantir, guys, I don't know how they're doing it, but they're actually holding these level of lows here, right? So we're going to put a very nice horizontal line right here. 1360 is the area to watch, guys. Now a triple bottom on this area. Even on the weekly, guys, I've been saying this is a weekly head and shoulders pattern. If we do fall through and break through here, guys, I will be looking pretty much in the $12, even $11 range. If I can get some shares of Palantir here, it would be absolutely beautiful. I would love it, especially considering that I do think that they deserve their $20 valuation here in the next 6 to 9 months as they continue to post positive earnings and continue growing revenue here. But as of now, your bears are in full term control here. The bounce by the bulls is nothing for 4 days, right? So if the markets continue to fall, I would not be surprised if Palantir does flush these levels, sending us into a weekly downtrend here. And then we'll be looking, when does this downtrend bottom out here? In my expectation, guys, $11 may be the area to look out for here on Palantir. If that does happen, I will definitely be a buyer. But as of now, no bulls to be seen, and I don't like this pattern. PayPal doing actually decently, right? Not good, not bad, just pretty much flat on the day. I guess it's good. I guess it's good that it's not down 2-3% like the rest of the market, right? But then again, PayPal has been absolutely crushed. So kind of normal that there's maybe just nobody left to sell, right? So at this point, guys, we are still struggling with this double bottom area right here around the 57 mark. Just looking that when this move does bottom out here, going to look for the size of the bounce, guys. Going to need to see them get about $62. If we can bounce up to 62, could set up for a potential daily uptrend reversal here and really start reversing the damage that we've been doing on the weekly here. But as of now, guys, still stuck in this weekly double bottom. If we don't flush 57 anymore, right, you will be just stuck in that weekly double bottom. That's the area that I'll be looking for. But obviously, bears in short-term control. They control the daily at this point. We lost the daily uptrend, right? So they do control, just looking for a lower high. And then if we don't bounce high enough, could give the extreme flush here. And then on the weekly, bears are obviously still in control, right? It's been a weekly downtrend pretty much for the past 2 years at this point, right? So I'm going to lead for that. The PayPal, in my opinion, won't do anything on its own, guys. It's going to depend on the overall market. So I assume when the overall market does bottom out here, potentially mid-September, mid-October here, that we will be getting some better movement on PayPal, because the valuation on PayPal, guys, right now is pretty cheap here. So when we do get a rotation back into technology, I would appreciate, I would understand if the institutions appreciate PayPal's value and tend to allocate a bit more to it. If we keep dropping in the lower $50 range, guys, I'll obviously be just adding more shares, because I do have a nice long-term belief for this company. And now lastly, guys, we're going to go over my portfolio. I figured I should make a bit of a longer video because I know it's been a rough day, rough week for a lot of you here. So really going into things in detail, just trying to give you guys a bit of positive reinforcement that it's time to be buying the dips. These dips are good, guys. They're not bad. I hope I haven't been too bearish. I do believe in the markets. It's just the technicals, right? We have to respect the technicals, daily, weekly downtrends. You have to wait for your daily downtrends to stop, and then only then will your weekly bounces be underway. But we're looking for the monthly higher lows on everything, right? So it's just a cycle, guys, just a cycle. But trust me, you'll be very happy if you start buying these monthly dips. All right. So portfolio, I was not immune to the drop as well. You can see that we dropped pretty much around 1%, just like the indexes did. So we were down at 33.66%. And the NASDAQ here trading today, well, it's not updated. It'll probably be around 26. So we are outperforming the NASDAQ still. And the S&P 500 down another 1.5% today. So they should be around 11.5%. We're still trading roughly around 33.6. So decent outperformance, right? 3 times on the S&P 500. So very good. Can't be mad at that. Especially, you can see, guys, August and September hasn't been the easiest for me either, right? You guys remember this day on the channel? My worst day pretty much all year happened pretty much that same week where we got the US credit downgrade, right? And then it's pretty much just been a struggle maintaining here. At least I've been outperforming. I haven't been dropping as much as the index is, but we still have been dropping even with my strategy, as I do own a few positions here that we got assigned that really dropped off heavily, right? Heavy drops on a lot of these. Had to cut a few losses. So we're managing, just not, not really outperforming the market as we should be right now. So in terms of the new positions, guys, you guys know, still have the AstraZeneca 66 from yesterday's video, still have the AMD 90s, the Apple 170s. I showed you guys, I added it, right? So Apple 170 in my sweet spot. I don't mind picking up shares of Apple in 170. That's this green line right here. So we'll see how we close on Friday. I also picked up, so AMD 90s are still in play. AMD trading roughly around 96 right now. So we'll see if I get those on Friday. Amazon 124s, I showed you the chart on Amazon. I wrote them midday when we were trading around right here, around the 127 area. And then unfortunately, towards the end of the day, it fell apart and it just dropped down below 126. So we'll see on Friday if I get assigned shares of Amazon 124. And if it keeps dropping, if I do get assigned, guys, and it keeps dropping, my next ad is around the 115, 116 area. So keep an eye on that for Amazon. All these stocks, guys, I'm buying them exactly in the areas that I want to be buying them. You see that? That's normal, right? And then we also have the CSIQ 25s. CSIQ is still trading roughly above 25, so we'll see if we get assigned on that. 25.14, just looking to lower the cost basis on my previous shares. If I do get assigned, my cost basis will go down roughly to 29.5. So going to be a very, very nice little average down there on CSIQ if I do get assigned. You see I still have the 200 shares here. Enphase 114s. I mean, Enphase was a bit volatile today, but Enphase still above 114 for Friday, trading around 119.15. So we'll see. Enphase also in my green box sweet spot, right? At the lower end, 114 would be all the way right down here. So Enphase, another position I could be picking up. Philip Morris, I didn't see, but they actually paid a dividend today. So Philip Morris, I have the 91s. They kind of dropped a lot today, but pretty much a lot because of the dividend, right? So the dividend was pretty much like $1.30, right? So from yesterday's trading, 93.60, let's call it. It opened at 92.30, and then we kind of dropped over and above that. So trading above 91.07, not too worried, guys. This is a very solid company, even if I get assigned in the $90 range. Very nice support around this green line right here, right? So very decent position. It's only one contract too. They pay a healthy dividend even if I do get assigned. Low valuation, and this is pretty much recession proof, guys. People don't necessarily stop smoking, right? When we go into a potential recession or when consumer spending gets cut, they usually keep spending on that. So those are pretty much all the positions, guys. We're still riding the PayPal, still riding the TMFs as well. You can see my cost basis here, nothing to hide. TMF is all the way down to 488. TMF, my average cost is pretty much 6.03. My Canadian banking shares here also down, average cost 19.90. We're down to 18.36. That hasn't been an easy one to swallow as well, but a $15,000 position there. Pays a monthly dividend of, you can see here on the right, 8.18%. So I'm just getting shares, reinvesting them, and eventually when our Canadian banking sector does recover, it will be a very beautiful trade. But obviously with interest rates being high, people aren't taking out as many loans. So the banks aren't generating as much earnings, guys. So completely normal, guys. Everything makes sense here. We are just building positions in companies that we want so that when they do recover, guys, this will be very, very, very healthy. And this TMF, for all you guys don't know, that's TLT. That's the 3 times leverage of TLT. So a few people were asking me, do you like TLT? I do like TLT, guys. TLT is the 20-year treasury bonds, okay? TLT now down to 2008 levels. 15 years of discounts, guys, right? So this is TLT, significantly off the all-time highs. The longer term bonds are the most sensitive to interest rate changes, guys. So when rates pause and start coming down, TLT will fly the most out of all of your bonds, guys, because that's just how the bond markets work in pricing these things. And TMF as a whole, TMF is just TLT, but with 3 times leverage, like TQQQ for QQQ, right? Or SPXL for SPY, the 3 times leverage products. Well, this is the one for TLT. So this is the one that I've been buying. And look, you can see the uptick in volume here, right, guys? You can see these volume bars, right? Not for nothing. People are positioning, guys, because rates are getting very close to the peak. And as soon as they peak and we start pricing in some potential decreases here, this is going to start to move. So I'm looking to build a position in these lower levels here at pretty much 15-year lows, guys, right? So these are the exact positions that I'm playing right now. All of my positions, guys, you will notice that they're either at my sweet spot or very close to potentially yearly lows, right? Multiple yearly lows. So I'm not trying to buy anything at highs, all right? So I hope you guys enjoyed the video. Bit of a long one today. I do apologize for that. I hope you appreciated all the information. If you did, consider dropping a like on the video. Consider sharing the video as well if you want to your friends. I always love doing analysis. Consider subscribing to the channel if you're new. Hope you appreciated everything we do. And lastly, if you have any questions, comments, analysis on stocks, you want to know some options plays that you may be interested in, or anything macro questions in general, feel free to drop a comment. I'd love to answer, guys. So take care. I'll see you guys after the close tomorrow, and peace.